maintaining a similar theme, but a slight little change. I'm really pleased to introduce Graeme Stanway, the co-founder and managing director of VCI. The topic that Graeme will be presenting is the innovation impact of COVID-19 and on the resource sector and what happens now. Graeme is a founding partner of VCI, which focuses on strategy, organizational architecture, and innovation in the resource, energy, and associated services sector. He has extensive track record of creating innovative strategic transformations in business. His work has been referenced in the book The First 11 as a benchmark case study in strategic transformation. And he has been awarded the Curtin Medal for Innovation from the Institution of Civil Engineers in the UK. I'm really pleased to introduce Graeme, who I see as a good friend and a colleague where we work together on a number of really interesting projects. So over to you, Graeme.
Yeah, thanks, Rick. I'm assuming you can see the screen okay. Everything's coming up?
Yes, we can see you.
Yeah, no worries. Look, thanks for inviting me to speak again this year, and really about COVID, what happens now, what are some of the long-term impacts on the mining industry. I'd just like to say probably three or four things right up front. Firstly is this is accelerating a lot of latent forces, and discussions I've had inside the mining and outside the mining industry is people are saying that this has sort of brought 10-year change forward into 1 or 2, particularly on the virtual side. The second point I'd make is, most people are focused on that, but it's not so much that it's brought year 10 forward to year 2 or 3 or 1 or 2. It's what happens post 10 years that's really interesting. So everything that was in year 10 onwards is actually now coming forward as well. So some of the very advanced sort of technologies will be in our planning time frame now. The other thing I'd say is that COVID will shift some things 180 degrees, and that's very hard to predict. So it won't just be acceleration, but we'll shift some things fully. And we know we're not going back to the future, but we don't quite know what'll stick. So there's a lot of uncertainty. I mean, the optimist in me says that this is a really positive thing, actually, because it's going to accelerate technology and flush out a lot of really poor business practices that have been a long time, to change. That's notwithstanding sort of a lot of the social and health challenges that we've had that have been really difficult for society. This work that I'm about to talk about comes from the State of Play organisation or research work. Basically, State of Play's done surveys every 2 years for the last 8 years on the global mining industry, and a lot of drill downs in cybersecurity and different countries' electrification and so on. But there was a big one done just recently on COVID that I'll draw some of this information from. The first thing I want to really talk about is just some of the external impacts of COVID, and then move more into the industry. But basically what you've seen with that orange line is a big disruption in trade, down 20%, it's rebounding now, but that's caused a real shock to the system. And so a lot of mining companies and services companies have reevaluated their supply chain dependencies. So looking at more diversification and more local sourcing, which has been a really big impact on that. The other one is obviously there's been a huge decline in air transport, 50% reduction in revenues. And again, most companies have actually changed different practices, and as you were just saying previously, have baked in future savings in terms of not travelling. The debt increase, has been very big around the world. I must admit, it feels a bit like magic pudding economics to me, that you can keep printing money effectively and not have inflation or any detrimental effects. So I guess we'll see how that plays out in the long term. But a lot of that's connected back into the point I made about supply chains. Countries are thinking, well, kind of direct some of that stimulus towards local manufacturing and local capability. So that'll have a big impact going forward. And the fourth point is, if you really look at the change in relative valuations of tech companies to value companies, the traditional companies, it's about a 75% increase in the technology index since January, and I think the other indices have all gone backwards. So it's been a massive shift in appraisal on companies. Now, for mining companies are pretty traditional models. I mean, you have to ask the question about whether this is a temporal thing that will just regress as it has in the past, or whether it's a fundamental changing of the guard in terms of how companies are valued and what people value as competitive advantage and growth and so on. So that potentially has another impact on longer term strategy in the industry. Some of the data that we have around this topic taken from the industry recently from State of Play, we asked a question about, once the world's recovered, what will be the lasting impacts? And you see a bifurcation between the miners and the services companies, miners being the dark blue and the services companies being the light blue. Basically, they all agree that work practices will change a lot in coming years, and we've talked a lot about the virtualisation and not travelling and so on. They won't be going back from that. But I would like to make a couple of points about that. We are social beings. My personal experience and talking to a lot of other people is design is much less efficient. So creative and strategic work is much less efficient, effective virtually. So, what will happen there? And I heard another CEO that I was talking to of a services companies, he basically said, look, if one sale is lost through not being there in person, significant sale, that'll be the last time we actually, close deals that way. So I think some of that's still yet to play out, but some inevitable changes. I think this is when things diverge a bit. Miners really see demand profiles as being an issue and being changed. I think there's lots of factors in the demand profile side. I mean, you've got the uncertainty side pushing people to gold as a safe haven. You've got just the sheer economic unpredictability, and most minerals demand is linked to economics. So what's the growth rate going to be? I think that'll have a big impact. You've seen technology acceleration, so in both virtualisation and energy, but that'll impact critical minerals and rare earths and so on. And then you've got the geopolitical uncertainty, which will change where a lot of these special minerals are actually sourced from, which I'll go into in more detail later. I think the other interesting thing is you've seen services companies being really focused on government debt is impacting them. I don't really have a clear understanding of why that's the case. Speculating it could be that the miners are probably less concerned because stimulus is going into infrastructure and they're not as exposed in terms of government debt, and they're more inflation resistant. Their assets and services companies are more exposed to government stimulus directly and local policies and so on. But it's the services companies that really see the organisations changing. They're very focused on virtual services models, as you can see there. They've had to sell virtually, they've had to deliver virtually, and a lot of the startups I've talked to have had to change their products, narrow the number of products, go to remote, very much into virtualisation and so on. And there's been a real sort of forecast on centralised organisations through this process, and I'll talk to that a bit more later. But it's fair to say that I think the productivity benefits of more empowered and decentralised organisations is really being recognised. I think the key here is that on the right-hand side is some of these things are direct accelerations that were going to happen anyway, and I think their message to everyone out there is really where things are accelerating is just get onto it faster than you were in the past, and go back to your plans and that you developed earlier in this respect, and sort of double down on them, bring them forward a lot more. I mean, I think where there's directional shifts, that's much more of a scenario-based, options-based process in terms of strategic planning. Now, the 5 things I really want to just dig into more deeply are these ones up here. Acceleration of digital technology, the gig economy, decentralised operating models, critical minerals and local manufacturing. They're the ones that, there's lots of things that will impact mining. They're the ones I think that COVID will really give the COVID impacts will give a good push to. There's lots of other things that are happening fast anyway, social pressures, energy transition and so on, that were happening anyway that I won't deal with. But these are the ones that I'd say, well, look, I'd go back to my plans that I had in February or March as a strategist or a CEO or CFO and say, well, look, these are going to be fundamentally different going forward. How am I dealing with them? Now, when we think about The first one I want to talk about is the acceleration of digital technology. And I think this is really interesting. And one of the exciting things about this is it's really picking the Band-Aid off, off this issue. We've all been, sort of deluged with digital transformation over the last few years, and some pretty and a lot of change resistance. It's been a bit of a slog. We've also been served up some fairly mediocre products, I think, as well. What's been great about this acceleration is that it's actually flushed out a lot of that change resistance, and also improved the sort of services models that we're getting. So if I was a CTO in charge of digital transformation, I'd be very excited that a lot of this is actually going forward quite quickly. If we look at what's happening, basically there's a cascading effect. People can't travel, so they insist on remote access. This is accelerating virtualisation. And the other trend we're seeing is a move from ROCs, remote operating centres, more to remote operating environments quickly as a response to this. These remote operating environments, as we talk to people, involve everyone. So it's quite a big shift of transparency in the business as opposed to the people that are just exposed to those other centres. That acceleration of virtualisation is really enabling integration to move forward as well. Integration of data and integration of systems has always been an issue, a big issue, but the fact that it's all running now through a virtualised system will actually accelerate the integration capacity of IT. Of course, what that's doing is will allow simulation AI to come forward, which means and ultimately decision making is how companies compete and win, and so the competition will change in the future. So all this is getting compressed and dragged forward. If we look at the left-hand side here, this is from State of Play, and it shows what companies are currently focusing on in technology and what they'll expect to be focusing on over the next 15 years. It's purposely juxtaposed because it's quite a different lens. What we're seeing is companies today focus mostly on sensing and data and increasingly on artificial intelligence and robotics. And if we looked at this 2 years ago, those dark green bars would have been much smaller for artificial intelligence and robotics. But when they look forward, they see a world of AI basically, and robotics, and data and sensing and communications just moving into the background as basically utilities. So what we're saying with this compression, I think the companies that sort of move on from being overly preoccupied with data and comms and move more quickly into the decision making and automation spaces will be the ones that will probably win. And I think this is going to come much faster than this sort of data is actually suggesting. The only other change in technology really is an increase over the last expected increase is energy systems, which is moving quite rapidly. Most of the rest people see a decrease over the next 15 years. So that's acceleration in digital technology is one of the big factors. The other one is the gig economy and new workforce models. The point here, I'd say, and I just caught the back end of the last conversation, we see lots of commentary about the flexibility and productivity of people. Most of the discussion is about how good it is to work from home and the sort of what that affords my lifestyle. But I'd make 2 points about that, and it's quite connected to the last conversation. If people can work from anywhere, then employees can employ from anywhere. If people can work flexibly on a task basis from home, well, people can be remunerated flexibly and remunerated for value. So that's the flip side that no one's really talking about much. So the moment that a competitive company can insource employees globally at a far cheaper rate and can incentivize them on a gig basis to get more productivity, and they can do that and win, they'll get the customer, and things will move in that direction. So I expect to see a really big increase in sort of the remote gig economy, people being sourced globally and paid for specific work, and economics will drive that. And I don't think there's anything holding that back. And if you look at the curves there on how the working from home rates and the internet, how that's correlated, you expect to see a sort of like a big uptick in that. And the gig economy, I think a couple of years ago, was over a few $100 billion to really actually increase dramatically. And like even in Australia, you see things like, I think there's a lot of call centres in major cities. You know, why would that be the case? Why wouldn't they be dispersed, you know, throughout rural Australia and so on? So you see a lot of those sort of changes and overseas. But it's one thing it will do is actually keep a lid on wages, I would think. So, you know, we're going to have that issue of recurring low wage inflation continuing. The third point I want to make really is around decentralised operating models. And I just want to tell a bit of a story about, you know, how this cycle goes. You know, any of us in here might start a business at some point. You know, it has a lot of success by being agile and small. You keep it very flat and people with a lot of autonomy. You succeed, you beat the big guys. Then you pick up another asset and you repeat that process and you cling tightly to, you know, your decentralised, empowered working model. And then at some point, someone comes along and, you know, starts talking to you about governance. You get, you know, a bit, you know, risk averse around that, and you start appointing people in the central head office. And then they start saying, well, wouldn't it be more efficient if we control this centrally? And so the story goes on, and you get duplication at the centre and out at the business units. Autonomy is reduced, productivity is reduced. And you start losing with respect to competition, and then the cycle goes round again. I think what you see with high-performing companies is they're able to do just enough governance centrally, really empower people, and recognise the real cost of centralisation versus the perceived advantages of standardisation and the efficiency gains that come with it. And the state of play work that we've done, we correlated total shareholder return with approaches to innovation, and the ones with the highest total shareholder return are very clearly their primary incentives for innovation were autonomy, and their primary innovation structures were culturally based. So that lines up with more decentralised operating models. And some really interesting work, an economist recently talked about you know, the decline of the global organisation really, and talked about the fact that particularly in the metals industry, you know, the multinational firms have expanded much more slowly than the domestic peers and have had lower ROEs. And for those of you who like reading business books, The Outsider is a great one that Warren Buffett talks about a lot. And all of those outstanding businesses had pretty decentralised businesses. So what's happened is COVID's laid bare a lot of these issues with overly centralised companies. And on the left-hand side, you can see daily confirmed cases of COVID, and you see it's very, very different globally. So centrally orchestrated businesses just couldn't cope with that, notwithstanding the fact that people couldn't get to sites. And so you're seeing, you know, most of the BU CEOs and people I talk to are saying, look, those models really didn't hold up through COVID, and we're looking at changing them, and not just because of COVID, but because of, you know, response to productivity and heritage and a whole bunch of other things. So what we expect to see moving forward is that technology will actually perform a lot of the governance functions and transparency functions, which will obviate the need for these centralised structures, and winning companies will move much more to decentralised autonomous businesses. The demand chain and the supply of critical minerals is the fourth major factor I wanted to talk about. Obviously, technology is pushing this forward, and I've spoken about that, but really it's the geopolitics that's probably a bit more interesting. You've seen a decline in basically integration as measured by trade over GDP since, you know, around the GFC times, and inevitably this is going to happen as the world power balance shifts between the US and China. That creates tension. That's pretty normal that integration comes under tension. This has been exacerbated through COVID quite a lot, because in all of the chaos, some of these tensions have been exploited. And what we've seen is, you know, trade sanctions are increasing. On the right hand, you see that some of the numbers around that. You know, Japan's providing big incentives for manufacturing to come back home, and we all know the US position quite well. I think what you're going to see is this flow on significantly to sourcing of raw materials. We're already seeing that with rare earths and critical minerals, and, you know, Lynas, for example, has been backed by the US, you know, US money. And you'll see it in iron ore as well, with, you know, Chinese working quite hard to actually find different sources than Australia. So I think this will be this sort of polarisation globally will change a lot of the supply chain on the minerals side. The final point of those 5 that I want to talk about was local manufacturing. And I expect to see this turn around for lots of reasons, but you see the precipitous level of local manufacturing in Australia just on the left-hand side there. So anyone who looks at that, you've been through this COVID issue where supply chains have been tenuous and we don't make much in Australia. So look, that can't be a good thing. And then the economists show us how sort of undiverse our economy and potentially fragile that is, and that can't be a good thing. So I think there's a lot of people that are saying, look, this has to change. Couple this with the rise in technology enabling efficient manufacturing locally. I'm just talking to Mark Chicoldi from Energy Renaissance the other day, and he's talking about his battery manufacturing facility and how robotics has fundamentally changed the equation there. So the cost equation. So I think we'll see a return to manufacturing through advanced manufacturing processes. The other factor is there's the rise of startups, there's explosion in the number of startups now for lots of reasons, including technology and capital availability, but they'll feed into these new manufacturing businesses, and also the money that's going into, the government money that's going into supporting new business and new acceleration of new business in this area will be interesting to watch. And there's a big new fund, as I'm sure most of you know, that METS are putting together now, METS Ignited. So that's the 5 big factors that I wanted to talk about. Now, of course, if you look forward, there's lots of uncertainty. So, there's a few things you do know, but there's a lot of things we don't know. And here's just a sort of a grab of a few of those we were thinking about. Vaccine development. It looks like, there's a lot of word out now that we'll have one early next year, but the Spanish flu is still with us in a mutated form, and no vaccine was found for that. And I don't think really vaccines have been found for flus very, very successfully. So I'd be brave to bet exclusively on a vaccine being successful. Winners and losers. I think this is really interesting. In the early stages of COVID, there was a lot of prediction around the developing world being damaged permanent, or not permanently, but for a long time through this. Certainly in India and Africa, there was a lot of issues resulting from COVID. But another lens on this is that this really could be the kickoff of the new Asian century. And if you look at the stock market and the companies in Asia and how Asia's responded, and everyone's been predicting this anyway, maybe this is the catalyst for that to really take off. When health impacts are pretty interesting as well. Will these just be temporary and we move on? Or is there going to be fundamental health impacts and damage, and what will that do to society? Obviously from looking back for previous pandemics, there were increases in neurological disorders and so on, Parkinson's disease, and things were correlated. So what's going to happen health-wise? If the economy, does it bounce back quickly to where it was, or is there some permanent lingering damage, or is it actually fundamentally new and enhanced? So a lot of uncertainty there. And I think urban development is probably one of the ones that we're all very interesting. We're going to have the CBDs that are hollowed out, or basically CBDs being enhanced once people work out that, I can work virtually, but the competitive game is actually being close to people, in the room, in the deal, that sort of thing. So I don't think that's got a long way to play out. But what I would say is that, with all of this uncertainty, all you can really do is build scenarios, take some options, early options, act with pace, and you need to act faster than you would have previously, remain agile and keep innovating. And the last point I want to just raise, really, and this comes from the state of play data, is that what we've done with separate surveys is correlated where people believe what position they take, whether they lead across industries or lead or they're a conservative follower. And then separately, how they perform, how their innovation programs perform. And look, there's a direct correlation between taking a leadership position and innovation success is critical for business success. Why is this the case? Why is there a correlated performance? Well, companies that take a proactive stance in innovation leadership invariably have a well-defined strategy that their innovation plugs into. They generally have the top cover from the CEO. They generally have well-funded programs. They generally have well-developed skill sets, whereas conservative followers tend to be a bit like the conservative investor who doesn't buy until until they can't resist any longer at the top of the market, and we all know how that sort of ends. So message here is, take proactive leadership positions and be very deliberate about it with innovation. Yeah, so that's it, Rick. Just tried to push through that as quickly as I could.
Graeme, as always, thank you very much for bringing us your insight. I think there's a lot to unbundle in that series of slides, and certainly a lot that is happening in a market that was already moving rapidly, and it was already shifting, and all of a sudden with COVID, in many cases creating a different world. And really the message that you're delivering to us is move faster or pivot, but don't stand still.
That's right.
So yeah. in that context, how well placed do you think is Australia, and in particularly Perth, to take advantage of the challenges that COVID is throwing towards us and the opportunities that are emerging?
Well, I mean, asset-wise, I mean, you can split that into sort of geography, assets, and the culture of Western Australia. I think assets, it's fantastically positioned. It's got plenty of the minerals that are required across the board. So I don't think that's an issue. It's very proximately based, so that's a huge asset, and we've talked about this many times. I think culturally, one thing that's underestimated about Western Australia, and I'm take this with a pinch because I'm an adopted local now, but I'm continually astounded how entrepreneurial the Western Australian business community is. Very entrepreneurial, right up there with some of the most sort of agile sectors I've seen globally. So I think that's there. So look, I think everything's lining up. I think there's a main thing, the issues between the US and China is something to navigate carefully. I think that's stalling. That's a bit of a that's a problem, because in conversations people will now retract from ideas that they wouldn't have retracted from a year ago in terms of partnerships and sourcing and so on, which is I think that's probably the biggest issue to navigate. Yeah, and I think the government can probably do a few things as well to really support growth of new business here.
Excellent. So in that context, Graeme, once again, just one final question. You and I know how significant the specialized minerals are and the capability that Australia has. Do you see an opportunity for Australia to be more proactive, and is it a role for government to play in trying to drive some of those resources?
Definitely. I mean, yes, and definitely right. Because if you look at some of the funding that's come from the US, it's via quasi-government organisations in any case. So a lot of the investors will be at a government level globally. So you would expect concomitant sort of input from our side. So I think definitely, and you just look at the sourcing profiles and the gap there is, in our block, effectively, the Western Bloc. So there's a huge gap in that. So yeah, I think it's a huge opportunity, and it's also a lot of value-adding opportunity as well if you couple it with processing and downstream activities, and how much more effective that can be now, not just based on labour costs as well. So it's a big opportunity.
Okay, Graeme, thank you very much for taking the time to join us today. I think, as always, insightful, provocative, and I think there's a whole range of information provided by Graeme in his presentation that should give thought to all of the entrepreneurs, startups, and operating companies that are servicing the mining industry in how to look at their strategy and how to review that in the context of the impact, the economic impact that was so well highlighted by Andrew Shelton, and the more strategic impacts of COVID that have impacted our industry, as highlighted by Graeme. So Graeme, thank you very much for joining us. Really appreciate your time. we will, as a conference, move on to the next stage, which are our roundtables. So I encourage everybody to select the roundtable you would like to participate, and also encourage you to put your Q&A questions for future speakers on the Q&A box. Look forward to catching up with the next speaker in a little while. And those that are joining the roundtables, please start to move towards those now. I will be involved in one of those, so I will be there shortly. Graeme, thank you once again. I appreciate your support.
No, thanks, Rick. Bye-bye.